Rohr here with an early global view on Friday, February 27th, 2015. It's currently 6:45 a.m. U.S. Central Time, and it's important to take a global view today because there is some further movement in the foreign exchange finally as of the later part of the U.S. trading session yesterday. But for now, we want to take a look at all the macro factors from the data. And as we look at what this means to the markets right now, the S&P 500 future is down 4 at 2104. And of course, that's very interesting because that's right about where the market tried the down break that didn't stick out of its aggressive short-term channel yesterday. And early today, it has further channel support right around 2101. While it's not a very significant measure up to this point on the longer term charts, the big penny at 2100 is important psychologically, and because right away on Monday the market on the pullbacks held right around 21 even. Now the other reason it's going to be important, as we'll see, is that the lower of the weekly oscillators, the market pushed above when it pushed above 2090 last week and it maintained itself above 2095 this week, does move up to 2100 next week. That's $100 over the 41-week average. If it fails, there's still good support back down into the false down break at 2092. And of course, the old major high from back in December was 2088.70. You see all the work the market did last week around that area over concerns with Greece before the Greek situation clarified on Friday, putting the market above 2100 for the first time. If it should continue upward, then there is some congestion resistance now around 2115, just recently generated congestion. And the bigger resistance this week is going to be 2125 to 30 oscillator resistance, but that moves up $5 with the 41-week average next week to 2130 to 35, with a topping line up at 2140. So there could be a pretty good further push up if this support around 2100 is not broken later today. And that pretty much does it for the short-term view of the S&P 500.